I'm speaking with Leo Haviland, and Leo, our topic is leverage and credit quality. Is there growing leverage? Are there declining credit standards? Is there complacency in a lot of stock and bond marketplaces today? Talk about leverage and credit quality, would you?
You raise an excellent issue, Scott. The leverage as measured by the New York Stock Exchange margin debt achieved a record high in February of 2014. In the past, peaks in that leverage measure, assuming it is a peak, have been associated with peaks in the United States stock marketplaces. As for leverage, one hears of stories about borrowing at pretty easy terms by wide varieties of parties to participate in a diverse set of financial and housing and other marketplaces. So leverage is probably widespread. As for credit standards, again, lots of anecdotal evidence, but some indicates that banks and borrowers have been able to marry themselves together. So borrowers get easy credit because there's such a search for yield that the lenders are willing to sacrifice strict credit standards in order to get what they view as a good, reasonable, acceptable, or sufficient return.
I think there's a relationship here to what we call the Goldilocks era. Can you draw that comparison, Leo?
Well, the Goldilocks era was the wonderful period from roughly 2004 or so up through mid-year 2007, in which economic growth was apparently wonderful. The U.S. stock marketplace soared. The housing world was completely devoid of risk, and where Wall Street, if not the master of the universe, was at least very high in the firmament. So that era, of course, disappeared with the dreadful economic crisis of 2007 at the end through perhaps mid-2009. As for now compared to then, interesting. There's a great search for yield. There's a wonderful hunt for return. No one thinks that the U.S. stock marketplace could decline much. And you have relatively easy credit standards by the central banks in both scenarios. So although history need not repeat itself, those looking at the Goldilocks era should worry about the world today.